Morning, everyone. Today is the 7th of August. It's another Monday, so it's another weekly market analysis that we do in here at Alphachain. Welcome. My name is Pedro. I'm the senior market analyst at Alphachain. So usually on Mondays, as you know, we go around and look at what happened last week and what's going to happen this week and how did the market reacted and what are we expecting and how we are expecting the market to react to for the week ahead. So it was an interesting week last week. We saw the negative move in the indices, dollar moving to the upside initially and then kind of retracing a little bit after Thursday. Again, oil moving to the upside, retesting April's high, going above $80 mark. In terms of the news, what we had, so we had a few, we had the last two interest rate decisions, one from Australia remaining the rates unchanged at 4.1%, surprising slightly the market that was still expecting another hike. However, the inflation report that they had a couple of weeks ago, it was better than expected, so they decided to remain the rates unchanged. And then we had Bank of England also announcing another interest rate going to 5.25%, like 25 basis points. There was still a possibility on the table for 50 basis points, but that was not the case. We mentioned about it after the core CPI data came out again a couple of weeks ago. It was below the 7% at 6.9%, and that opened the door for only these 25 basis points hike. Like again, what you're looking from the Bank of England is still to continue to push the more hikes in the future. It's still a little bit of a different approach comparing with what what the Fed or the ECB mentioned on their meetings. Like it's going to be more data dependent. Bank of England, there's maybe a little bit more room to go. Of course, the inflation in the UK is still quite high comparing with the other countries. It's going to be important data this next Friday, if not mistaken, is in regards to the GDP in the UK, and to see if we are going to expect this negative economy or not, the recession, if it's going to be here or not. We're going to take a look at it in a bit. Aside from that, of course, it was the first week of the month. So every time that it's the first week, the focus is more on the labor market in the US. So we had non-farm payroll last Friday. It was below the expectation, right, at 187 new jobs instead of 205. Nevertheless, the unemployment rate actually decreased to 3.5% instead of 3.6%. And another concern, one of the concerns is actually the average hourly earnings, which was at 0.4%, like higher than it was expected, and the same as last month. Like again, this can create pressure into the inflation in the US, and it's kind of one of the concerns also from the Fed at this point. So it's still too early. Again, as the Fed mentioned, they are data dependent. So next time that they're going to meet in September, at this point, the probability and the rates is actually that's going to stay the same at 5.5%. However, the Fed said it's going to be data dependent. So, and with that being said, they are waiting still for not just the data that they are collecting from August, but of course still September's data. So anything that any data that's coming out in August, it's going to be important. However, it's not going to be decisive because again, September there's still going to be more data, and that's actually going to be the last point where the Fed eventually is going to make a decision on what to do then on the next meeting on the 20th of September. So in short, yes, data dependent. So any reports are going to be important in terms of NFP, CPI, and so on. However, the September data is going to be even more important in terms of the impact that can have in the markets comparing with the data received now during this month of August. Right? Again, expecting to stay unchanged, and that's kind of what the market is pricing in. yeah, moving on, we also had manufacturing PMI last week. It's still a little bit weak and below the 50, and services PMI a little bit. It's still in an expansive mode above 50. However, it was actually slightly below the expectation in the US. Looking for this week. This week's going to be CPI data, especially in the US. It's kind of the biggest catalyst to look at. It's going to be on Thursday, and we are looking, or the market's expecting a slight increase in the normal CPI to go from 3 to 3.3%. That's kind of what you're looking for, and to stay kind of unchanged in terms of the core CPI at 4.8% to remain the same change on a monthly basis from 0.2%. Like again, the last month CPI, it was quite positive, so it was a big decrease in terms of what the market was expecting. And with the Fed and the Fitch report mentioned that that was just 1 month of data. And you would like to see as more than just one data point, maybe a second strong positive CPI. In this case, it's lower, or maybe even a third one. Again, by September, we'll see, in order to then actually make a more decisive decision in terms of what to do with rates, and if there's going to be any even potential, for example, for any future rate cuts ahead. So that's mostly what the Fed is going to be looking for. In terms of the GDP, as I mentioned, is going to be quite important as well, to see maybe to create pressure or not on the Bank of England in terms of what to do in the next interest rate decision as well, and if we are going to be in this recession mode or not. So that's mostly what you're going to have in here. In China, there's also kind of inflation, right? It's going to have CPI, credit data, and China has been trying to import stimulus into the economy to see if it helps with the growth of the economy in there. So that's something to pay attention to. The situation still in Russia and Ukraine, especially with the commodities, that can lead maybe to the commodities prices to increase. So that's something also to keep an eye on. And we have seen oil also again moving all the way through. We saw Saudi Arabia and also Russia extending their production cut in September, with the probability maybe of even extending more into October. And other situations that are have been helping the price of oil, the WTI, to move to the upside, which is actually at a really key point at this point. And if it breaks April's highs, maybe there's even more room to the upside. So that's a little bit in terms of the data. Again, in terms of earnings, last week we had Apple and Amazon. They beat expectations. However, there was a little bit of a concern in terms of Apple, the iPhone sales, and it were a little bit below the expectation. So that's one of the concerns in there. And there are continuation of earnings for this week, even though the main ones, they kind of have been announced at this point. So looking at the market, right? So what we had in here, we have a little bit of a correction on the dollar, with the NFP also pushing dollar again to the downside. However, we actually, but at the end of this of Friday session, we actually start having a little bit of a correction on the dollar, on the euro as well, and on many other assets as well, right? So this was something that we're looking for. Like we're looking for the dollar to be kind of retesting a little bit this range in here, and that's kind of where we're aiming for. We had a little bit of correction on Thursday, and there was still even the possibility to go a bit higher before the move down, and maybe price can still maybe aim towards that level. So again, we are within this range, and that's kind of any opportunities are going to be priced around this level until we either break kind of this level to the upside, or then eventually start aiming go to these lows again. We may even go even below that, and even can below those lows in here. So expectation maybe a little bit more of a continuation to the upside, and let's see how price is going to maybe react from there. There's maybe more room to the downside on dollar. It's a little bit in this size at this point, exactly in the direction that we are looking in here. In terms of the indices, again, they had a continuation. Of course, one of the most important points from last week is actually the Fitch that cut US rating from AAA to AA, and we actually saw a big sell-off happening when that news were announced. It was close to the end of the session, Tuesday night, and then on Wednesday we woke up with a big gap to the downside and a big sell-off occurring on that day, and then another sell-off in the last few hours of Friday's session in the indices, right? So again, we were starting to position ourselves exactly for this situation, looking a little bit more of a move to the downside or a potential turn in here on the indices after price finally reacted from a good level from the left side and starting to show some weakness in here also on the approach for this last couple of weeks or even couple of months as well. So let's see now what's going to happen. We do have maybe this important structure in here that can maybe hold price a little bit to the upside, or by any chance, if we start continue to move a bit lower in here and maybe retest this level 4,326, which is kind of that support resistance level back from August that maybe price can aim to. Like maybe this is the range that you're going to be playing around. We did manage to break now to the downside this trend line, this upper trend line that we have in here since the end of March. So there you go. That's what we have in here on the S&P. One important point, right, that also helped to identify these turns or potential reversal on the indices is the alignment in particular case between S&P and Nasdaq. Like we noticed that Nasdaq during these last few months has been leading in regards to the S&P. Like Nasdaq has been in an upper move comparing with the S&P, and S&P has been lagging. However, in these last couple of weeks, they actually kind of finally match up with each other and kind of got in alignment around the same levels. Like if you pay attention to the level where actually Nasdaq has been reacting from on the left side and now where S&P is also reacting from on the left side, it's basically the same one. Like, but before that, Nasdaq has been leading. Like while Nasdaq was already kind of in here, S&P was maybe somewhere in here. Like it was literally lagging comparing. You can literally do that exercise and we'll see the timings of the move to the upside and where they were, and now they finally got in alignment, and that's usually can be a good input in terms of now expecting the reversal. Now it will be the right timing maybe to expect this reversal. Until they kind of in alignment, maybe we shouldn't be really expect a big move to the downside. Now there's still more confirmation that needs to happen in order for that big reversal to occur, or big shift in the trend. But this is something to be aware of, that you can try to use in order to actually make those predictions of a big potential turn on the indices. Looking at Nasdaq again, something that we've been looking for, right, for price to these highs since it was created, that we start turning a little bit bearish, with the potential, of course, of looking for price to get to this level. Something that you mentioned as well, it was this important key level in here that has been worked quite nicely as a level of resistance, which now has been actually used a little bit of a zone of support since last Friday. If we do manage to break below that level, I think we may start opening the door for much further down. We managed to break below this trend line as well that we had in there. So this is a little bit of what we are looking for, right? And this starts again opening the door, or potential door for a much further move down in the on the Nasdaq and also in the S&P as well. But key level still this level. Like as long as if this holds, maybe you can resume the move upwards. If this starts breaking, then you can even have a little bit of a retracement before a move to downside, which could be even the target of this upper trend line in there, or you can even start moving much further down. For example, we can even target that specific high as well from August all the way from here, just like on the S&P. So this is a little bit of what we have in here on Nasdaq as well. We have been starting to turn bearish. Dow similar as well, so good level, and they're finally kind of a little bit in alignment with the S&P and Nasdaq. Again, continuation a little bit more to downside. I think that can be expected. Kind of this is something that we're looking for since you broke that. Maybe retesting a little bit more this extreme and then even targeting a little bit more further down. I think eventually that can be a good target for the Dow. And then let's see if price wants to continue to go higher, or if it break below this level, maybe then you can even go a bit more farther down than that. Right? But that's something to look for. Last week we were 100% positioning ourselves for a move to downside in here, and that's exactly what happened. And then we have DAX, which also created a really strong move to downside. Maybe the target can be the retest of this level in here for this move to downside. It has been holding this level for now. So let's see, it can even go higher a little bit, maybe retest this level, and then maybe the move in there. So again, plenty of volatility also in the indices, which is something that we can be looking at. Then you have this Euro index. Euro index has been kind of ranging a little bit. It hasn't really been a Euro move. Last week, we saw some of the Euro pairs moving higher, other Euro pairs moving down, and kind of that's why this Euro index was in this range in here. We didn't manage to break slightly above this high, kind of still reacting a little bit from that level. Personally, I think we may still continue to move or to look for eventually further move to downside in here. However, we can actually maybe retrace first towards that level before that happens, or even retesting a little bit more even here before we have this move to the downside, right? Or can maybe just go from there and that's it. Yeah, bigger picture, I think we may go a little bit more towards this level, if not even then below those walls before we break this this size. It's like we mentioned 1 minute ago, in terms of creating these potential scenarios of kind of what can happen, and maybe attribute different probabilities to which levels we are expecting to break first or second. Then we have the yen index, interesting move as well. One particular point in terms of the yen, something that I didn't mention also, that it was announced last week, is that the Bank of Japan opened the door to intervene, like open the door to actually buy bonds, yen bonds from the 5 or 10 year bond yields. So it's exactly what they did last year, and it's something that we also announced. At this point, they haven't done it yet, but if you start noticing the yen kind of get weaker again and getting retesting to these levels, or in particular if you see dollar yen getting closer to those 145 mark, that's usually maybe when we can expect the Bank of Japan to do something like that. Like, so they announced it's going to be a notice. Of course, they're not going to be mentioning when they're going to do it, but they mentioned that they are planning to do it in case it's necessary. And we had that move to the upside, like this. This move in here, it was exactly when that news came out. So you saw the strength on the yen as a reaction to that. Again, this level can be interesting on the previous retest of this level in terms of looking to see if price goes a little bit more to downside from here, or kind of tests again that level. So that's a little bit of what we have in here on the yen index, right? So we'll see which direction actually is going to go to. We're looking for this move to the upside that happened already. So let's see now, if you start breaking a little bit above it, maybe there's a potential to go towards that level, or if this kind of holds, maybe can start aiming a little bit more closer to these lows in here on the yen index. Looking for individual currency pairs, and starting with the euro dollar. Like euro dollar managed to hold last Monday's high, and it keeps holding it in there. So this is what we had, a little bit of a move to the upside with NFP. Still respecting this level, there's maybe a potential zone or opportunity to maybe to look for longs a little bit more around this level, or maybe a little bit of the retest of the zone created with the NFP. So let's see. Overall, yes, we are still in this bearish momentum. This size kept holding price, and maybe this is maybe the level that we are looking for on the euro. So let's see how it's going to behave today, and if there's maybe the break of last week's lows before maybe moving to the upside. So that's a little bit of what we can be looking at on the eurozone. we have pound, right? Pound had a lot of volatility around the interest rate decision, right? We had that move to the downside. It eventually reached one of the targets. It was based on this low in here. A lot of this was compressed, so kind of we're looking then for price to get there, and it reacted to it, and now it retested the next level of structure, right? So basically went from one target to the other one, and we are kind of in between these two levels now. So let's see which direction actually it's going to break first. If it breaks above this level, or kind of it resumes to move to the downside and eventually breaks below these lows, maybe then pushing price even lower, right? So that's something to keep an eye on the pound at this point, in terms of seeing maybe where the next opportunities are in here. And of course, focus on the GDP announcement on the next Friday. Aussie, so on the Aussie, we finally kind of broke below that level and we got closer to this target in here. In this particular case, we may continue to move a little bit more to the downside. If this level keeps holding, we may have that move down. If this level breaks to the upside, maybe then you can look for a move to the upside. We can even go below this low. I wouldn't be surprised if that happens, if we actually start aiming to go a little bit more lower than that. So let's see exactly what may happen in here on the Aussie dollar. Yeah, as long as this holds, I think we continue to see more bearish momentum in here, and the continuation to the downside, which on the other side it will maybe take Euro Aussie to the upside in here, eventually even taking these highs. So that's maybe something to look for in this case. Looking at the yen pairs, right? So we have dollar yen within this range. Again, if the dollar yen gets closer to that 145, this is maybe the moment when the Bank of Japan may intervene in that sense. So let's see. We had a sell-off end of last week as well. Then confirmation with the NFP, and kind of now we are getting in the middle of this value here, having a little bit of a retracement. Again, bigger picture, maybe can continue to aim a little bit more higher and to create this pressure in here. Especially it can be helped as well with the dollar if the dollar continues to go higher. So let's see. This value in here maybe can work as well as a zone to look for that move to the upside, or if you're looking for any sales, maybe to test off this level, right? So this was the range that you're looking for. We have been bullish in here, but now that price reached this level, now it's a little bit more cautious in terms of looking for more longs in here. So that's what we have. Euro yen, maybe there's a little bit more of a move to downside. This level kind of reacted quite nicely, this support resistance level in there. But this highs also reacted quite nicely, and we may be creating that kind of a move back towards this level once again. So that's a potential setup in here on the euro yen to look for a further move to the downside towards even this range, or even all the way back to these lows. It was a nice reaction from these highs in here. So there's that possibility of looking for these sales on the euro yen. Pound yen a little bit similar. Maybe can retest this level and then maybe target a little bit this level again of moving to the downside in there. Looking at CAD, so CAD finally made that move to the upside, right, over the weekend. Not over the weekend, in this last few days. So since Thursday or Wednesday, we had a big move to the upside. We managed to break these highs. That was a move that we were looking for as well, and kind of retested, and maybe the possibilities to continue at least maybe towards these highs. I think maybe that could be a good target for a long in here. Then even with the potential of getting closer to this level in the bigger picture. Like, but for now, maybe you can feel that level and then kind of start some kind of compression here until maybe price gets there. So that's something that you can maybe aim to on dollar CAD, or maybe you can have another retracement before that, and then eventually going higher. So it's going to be interesting to see. But overall, I think the target for now, it's going to retest of these highs in here. Almost all of it in here has been compressed at this point. Looking even at the other CAD pairs, like we're moving to the upside in here on the euro CAD as well. Let's see how price reacts from there. But maybe the target can be even a bit higher in there as well. So just something to keep an eye on. Dollar franc Swiss. So dollar franc Swiss has finally corrected a little bit, and we are getting closer to this previous level support resistance. This can be maybe a good level to expect some reaction. Actually, we already had that reaction a little bit since last Friday, with the potential to just continue and even go a bit higher in here, getting closer to this level in there, or even target that those highs in there. So that's a little bit of what we have. Possibility to even go down one more time, maybe getting closer to this level before maybe aiming to go higher. So it's quite interesting, and the possibilities that's going to happen in here. I think we are back to have some potential good setups on dollar franc Swiss. Gold may continue to move to downside. That's a little bit of what we're expecting. Again, the range that we've been looking for has been at this level since price we got to the extreme of that level in there. We start moving to downside, start breaking lows, we start opening doors to go further down, and maybe the final destination can be closer to these lows one more time. Like we had that move to the upside. It was a good reaction from there during the NFP. And now his question mark is going to respect in here and go higher, or is going to continue. Right at this point, this is the high, this is the level that you are looking for to see actually which direction actually it's going to go next. Bigger picture, I think we can maybe aim towards these lows before actually maybe making another attempt to go higher on gold. But it was a good level in there where it reacted from. Like looking at oil, and this is what we have, like retesting this level from April, like the highs. After spending a lot of time around this level, we moved all the way through, and now let's see if this level is going to, these highs are going to manage to be broken. Again, oil sometimes tends to can behave a little bit in a ranging market. So let's see what's going to happen. This level in here, personally, it's quite important for me in terms of if this holds, maybe price can go higher. If this starts breaking it, maybe there's opportunity to at least push to these lows. And if this breaks, maybe can actually start having a little bit more of a deep retracement in here. And maybe then the range market can be in place. If this holds, yeah, maybe can start aiming more to the upside, and maybe can start targeting those $90 mark on oil. So let's see exactly how price is going to behave around this level. So far, the highs are holding quite nicely since last Friday in there, and this morning as well. So it was a good level in there on oil. Moving along, and to complete with crypto as always, right? So it starts to, again, the volatility is not there. It has been quite hard to trade crypto recently, right? There's maybe one or two moves, and then there are quite a few days without much volatility in here, which to find opportunities can be a bit tricky. There have been better markets to look for example, the indices, for example, oil, commodities, right? Even some of the currency pairs have offered much better opportunities than Bitcoin or Ethereum in this particular case for the last month or so. But looking ahead, what we have in here is crypto total market. We had that move to the upside last week, like we kind of broke a little bit this structure. We know we already have a new low in here. And yes, I'm expecting eventually a little bit of a deep retracement for price maybe to target above this highs, and from there maybe to then continue to downside. Like that has been a little bit of the prediction since last few weeks. Meanwhile, price still kind of holds it in here. So let's see what's going to be the catalyst that's going to push eventually or to create volatility in here in crypto. Bitcoin. Again, nothing changed. We mentioned last week we had that low. It is actually kind of an interesting low that to break that level. So bigger picture, I'm expecting eventually price to go much further down. However, I actually would like to see price going up again before moving down. It's a little bit of what we've been talking about. This particular high, that's a little bit of a concern in terms of looking for price to move higher. It was a really good level where price reacted from its previous level of support resistance in here and that level. So that was something that in terms of a target for a long in here, this could have been one of those. And because of that, we may even create new lows from this point on, but we'll see. We had that small move, that quick move, I think it was Friday, that occurred in there, and now we kind of are within this level in here. So let's see. From here, maybe price could go higher. Of course, this high needs to break. If this high breaks, then we can start targeting or moving much higher in there, and maybe can even aim to finally take this high and then go all the way and take this one as well, right? So this is kind of a key level of structure that you're looking for, and this one is the next one. So that's kind of a little bit of what you're looking here. I do like it. I like the potential setup to see something like this, at least maybe to target this size, and then let's see how price is going to react from there. If you by any chance make a new low in here, then let's reassess and try to find then good opportunities to maybe look for it. Again, we do have still this this zone in here of support resistance that maybe price can still go to before making the move upwards, maybe taking this low one more time. That could be a potential setup in there. Otherwise, then price can go even further down in there. Looking at Ethereum, yeah, Ethereum also kind of slightly took this this low. It may open a little bit more the move to the room to go further down. Meanwhile, we are compressing quite a lot in here. Again, this size, as long as it holds, maybe price can go a little bit higher. If it breaks above it, then maybe can have finally a move away from this level. And without this compression, don't be surprised if by any chance the move is quite strong and quick to the upside, right? Because everything in here basically has been compressed so far, and we then maybe start aiming again above this level or even a little bit above this high as well in there. Meanwhile, we can maybe go first. We can maybe even go down first. So again, it's an interesting zone where price is reacting at this point, and we just need to see it more volatile, right? We just need to see more volatility into the crypto space, which has been quiet in this last month in here, right? Yeah, we'll see what's going to be the catalyst also to help eventually to bring more volatility into the crypto space again. So that's it, guys. Thank you so much. Just to summarize it, like in terms of the dollar, we may continue to see a little bit more of a room to the upside and maybe price targeting a little bit more these highs in here at around 103. And in terms of the indices, it's going to be quite interesting to see if there's going to be another negative week or not, or if it's going to be any aim to test the highs. In this particular case, again, we are looking at maybe a little bit of this range in here of the structure, with this pre-level support resistance on the S&P, Nasdaq as well, a key level in there. And if you do break below that level, maybe then we can target, for example, that high from August last summer as the next level of support resistance. In terms of oil, to see if it's going to break the highs or not, or it's going to hold that highs from April and maybe move to downside. That's a little bit of what you have. Like CPI is going to be quite important. It's going to be on Thursday, so it's going to be later on in the week. And again, is going to be another positive CPI data, or is going to be a surprise to a negative surprise, and price and the CPI number is going to be higher than expected. That's something to keep an eye on as well. With that being said, thank you very much, guys, and I'll see you next week. Bye-bye.